Hello, everyone. Happy Sunday. This is Simon with AvaTrade, and I'm happy to welcome you all to our weekly webinar and special welcome to the new people, of course. And the idea of the webinar is it's right there in the title, your weekly trading plan. As I always say, you plan your trade and then you trade your plan. This way you can be more organized, less spontaneous, less and more focused, more structural, and so on. So that's what we do here. A few things about myself before we go further. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been involved with trading for the past 22 years. I started in New York as a proprietary day trader. I worked in a couple of firms, so maybe 3 firms in New York City. And after 11 years of doing it, I stopped the active day trading and I just moved in a different way of trading. And also, I've been mentoring and educating other traders. And currently, I'm happy to work with AvaTrade and try to assist our customers with the trading as much as possible. And that's what I do. Now, the agenda of the webinar is very simple. We go through indices, stocks, commodities, Forex, sometimes in a different order, but we try to cover it all. And usually we start with the big picture and just trying to understand what's happening in general before we go to any specific markets. These are the channels that I recommend that you use. We have Telegram, we have Twitter, and of course my favorite YouTube channel where things are being updated daily. You have webinars. If you miss the webinar, most of the webinars are being recorded and being posted to the YouTube. You have a lot of educational material there. You have tutorials and a lot of things. You can subscribe to it. You can click on that bell so you'll be notified when new things are coming in. And of course, you can share it with the friends and the people that might be benefiting from this. Risk warning. You can find the full statement at avatrade.com. And the idea of it, it's in a simple way, everything we do here is purely educational and not recommending anything. Now, big picture, and we discussed it last week. We were preparing for a very busy week with the CPI numbers and then the Fed's decision on interest rate and the announcement and the press conference. And we said that the announcement's pretty much, or the rate cuts pretty much priced in. Everybody was expecting 0.5%, and that's exactly what happened. And then the announcement of the policy and especially the press conference that created a lot of volatility, as I mentioned, that was expected as well. And the bottom line, that the Feds are continuing to be super hawkish. And I just took this snapshot from MarketWatch. You can find the article on the website. It says stocks are plunging because the Fed cannot lose the battle on inflation. So kind of I don't know if it was a fantasy or let's say expectations or people or the traders and analysts were expecting much more softness, especially after the inflation showed further weakness on Tuesday. But the Feds are not showing any weakness and they are continuing to raise the rates. And the rate cuts that were expected maybe next year, they're not coming at least till the 2024, maybe even after. So it was a disappointment for the markets and market reacted in a negative way. We're going to be taking a look in a moment to the charts and the instruments. Now, economic calendar, and again, for new people, it's very important that you be aware of things that are happening. Whether you're trading specific instruments, you can filter to the area that you, let's say if you're trading European markets, you want to have European news, US markets, US news. But in today's economy, everything's global. So it's good to kind of be aware of what's happening. And what I do here I take the high impact events, and these are marked in red. You can find the economic calendar on our web trader on the app. You can find third parties. There are a lot of suppliers of this. It's a public information. It's available ahead of time, so you can be prepared. You can make plans. You can put it in your calendar if you'd like, and so on. So, like I said, these are high impact. I just filtered them out. And let's see what's happening this week. So we have Bank of Australia meeting minutes. They'll be talking about the monetary policies, I believe. Interest rate decision on China. China, as you know, has been bouncing a little bit since they turned around with the easing on the COVID restrictions. So maybe they will also make a decision that's kind of a softer for the markets. They've been cutting rates lately, just trying to save the economy. It's been struggling a lot. So that's another decision we have on Monday. Bank of Japan also interest rate decision on Monday. As of now, they haven't changed anything. They still probably the only one out of central banks that still have negative interest, minus 0.1%. So that's on Monday. They're followed by the statement, and then we're going into already Tuesday, middle of the night, the press conference from Bank of Japan as well. So that's going to be interesting and definitely affecting the Japanese yen. We have retail sales coming on Tuesday from Canada, consumer price index, the inflation numbers from Canada. As you could see here, they expect inflation to rise in this report. On Thursday, GDP numbers from UK, GDP numbers from US, and another monetary policy statement or meeting minutes from Japan. That's kind of a follow-up or next announcement after the interest rate decision. We have durable goods on Friday from US, and that's it pretty much. Of course, there are more announcements. As I said, you can filter them out and check them out for yourself, whatever is relevant for you. So let's move to the trading terminal, this MT4, and let's take a look at some instruments. Before that, just to give you an idea of the previous week, how it was affected, we had, as usually we start with indices. So S&Ps finished, let's bring the S&Ps daily chart. So after falling on Friday for 1.1%, the overall S&Ps fell 2.1% in a week. As you could see, it's the second consecutive week to the downside. And it started the week very nicely. The two up days, Monday and Tuesday, in anticipation of some positive mood from the Feds of the market. And inflation added to it, we came right back in. And of course, on Wednesday, when the press conference kicked in, we continued sliding lower. So that's an S&P 500. Nasdaq, similar idea. It was down on Friday 1%, finished the week 2.7% lower. The same thing, we had the beginning of the week, nice move. We even broke through the 200 moving average on Tuesday. We mentioned last week, if you remember, I mentioned that 200 daily moving average, it's kind of a resistance here. We broke through it briefly, you can say, and then we sold right after Wednesday's announcement of the Fed's and press conference. So that's on Nasdaq. Dow Jones, it still remains the strongest out of 3 US indices, and we're still, sorry, this is DAX. It still remains the strongest. We did hold that resistance, as we mentioned, from mid-August. We had some action above it. This is Monday and Tuesday. We had a nice move to the upside. It was rejected, and similar idea went down, and we are currently below the 50 moving average, still about the 100 and 200 on Dow Jones. Now let's go to DAX that I pulled out by mistake. DAX this week held that resistance that we mentioned, June level that we confirmed here. On Tuesday, we tried to break out, we refused, and then we sold. So as you could see, the indices after the Fed's hawkish mood and hawkish predictions affected not just US indices, also global indices, as I mentioned. Now, FTSE, UK FTSE sold out, and it's right at the 200 moving average. Nikkei sold as well, and even Nifty 50, the Indian index that we've been talking about. Take a look, maybe on this global negative mood in equities, maybe this extended move to the upside came to time of correction, and this is the first week that we're closed below this resistance here at 18,488. And on the daily chart, after closing on Thursday, Friday we remained below it. So it could be that now we could see that correction in Nifty. We might go and retest 50 moving average, and the next thing, and we might come to one of the supports, maybe even all the way here at some point where we had a lot of accumulation followed by a nice move to the upside. So we're not going to be predicting, of course, where we're going to go, but it could be if the markets, which it looks like the whole mood, they say even for the next year, some analysts said that we might see towards the end of the year a move to the upside, but before that the market will be selling on this fear of recession and a hawkish mood of the Fed and so on. So overall indices are facing the weakness, and as I mentioned to you, December statistically is a positive month, but this year somebody said, don't remember who, there was a report, kind of funny but sad at the same time. They said the Powell killed the Santa rally, and that's the rally that usually is happening every December into the end of the year. So that's as far as the equities. Now, if you look at China, China had a nice run since the change in the policy and pretty much reversal from the being super tight to be pretty easy now after the protests and everything else. So we had a nice move, but we've been sitting here trying to break above the 200 moving average, so far not succeeding. So we'll be watching what's next in China. Some analysts actually said this: the China recovery could save the world or U.S. from recession. Also could be, but it looks like it's having a hard time breaking to the upside. Let's see what happens. Now, on that note, copper has been selling the past couple of days to the downside. Australian dollar, it's been selling as well. We'll be taking a look at the currencies at the moment, and so copper, as we said, has been selling. Oil the past 2 days also has been selling after bouncing a little bit from around $70 per barrel. So that's as far as indices. Now, individual stocks, Tesla comes to mind. It's been super weak, and even on the days when the market went up in the beginning of the week, Tesla sold out. And I don't know if it's true or not. There were talks that Musk sold more shares. I'm not sure. I couldn't confirm that, but there are, I don't want to call them rumors, but information out there. Now, interesting statistics. While I was researching Tesla, I just thought I would bring it just for general education to you. Elon Musk is not the number one richest person. He gave away his still number 2 though, and this year he lost his pretty much lost net worth is about $110 billion. And he's still worth $161 billion. And that's more than Bezos and Zuckerman together. So here are the numbers, okay? Tesla shares are down 62% year to date. And as we know, a lot of it was caused by him involved with Twitter deals, is that the stocks really was selling heavily. Now, the other two stocks, Amazon lost significant chunk of money, and also Meta, which is Facebook, former Facebook, also lost. So I'll just give you the numbers. These are big numbers. So Meta platform down 64% a year, and Zuckerberg lost about $81 billion, and Amazon shares down 48%, and Bezos, his wealth dropped by $80.7 billion in 2022. So with interesting, Tesla, with all this drop in the value, Musk is still pretty much worth more than, as I said, that Bezos and Zuckerberg together. Big numbers, okay, just for information. So Tesla actually broke. It shows here 150 or something. The stock after market closed around $149. So let's see. It's a lot of information to digest over the weekend for the traders and analysts and retail traders and big shot traders and everything else. It's going to be an interesting week to see how we go about the market. We still have less than 10 weeks till the end of the year. Overall, the mood is not so positive, so we might see continuation in sell-offs on the stocks. So let's take a look at a pretty much big stock. Apple has been selling. If you remember, I mentioned 150 key level. We didn't even get close to it. Disney, after that positive announcement of the former CEO coming in, we couldn't break $100. Now we're at around $90. Amazon is down. All the big players are down pretty much. Now the banks, I mentioned last week, the banks are really sold out this week. That it was just a sell-off. Citibank, JP Morgan, Goldman Sachs. By the way, Goldman Sachs, I just did some research. Goldman Sachs is going to announce a layoff of some of the employees, and it's a sign that the companies are really struggling. So they're trying to save money in this case by letting go some employees. Usually, the stock reacts in a positive way after that, because that would, sadly, of course, people will lose jobs, but it will improve the bottom line of the company. So after the announcements of the layoff, at least right after that, the stocks tend to jump a little bit. So banks, we're going to be watching the banks of possible continuation. It's a downside pressure, and it looks like, if you take a look, Goldman, all this move up, and just this really choppy trading with the gaps and continuation to the downside. So these are the banks. So oil stocks, Exxon and Chevron, it looks like they're trying to find some support at current levels. Exxon is holding to around $104, $105, and Chevron also, the last 2 days, as the oil was going to lower, the stock, it looks like it's finding its support around here. So again, just to remind you, if the market continues sliding, the stocks, of course, will continue lower. Even the good stocks will sell off on the falling market. And let's see, maybe they'll find a reason to run the market to the upside. But as of now, the general mood is not so positive. As I said, I keep on repeating it. I don't want to make everybody depressed. It's actually not bad for us. For the trader, it doesn't matter it goes up or down. It's good that we have volatility and we have market moving. There's always money to be made on both sides, on buying and on the shorting side. So um, some traders actually like falling market. They think it's easier to make money on the falling market. Sometimes I could agree with that, especially when the panic selling starting, that the stocks are falling kind of faster than they're going up. So we'll see what the upcoming week will bring to us as far as the equity markets. Now, interesting enough, with the markets falling, it looks like gold is kind of regaining the status of safe haven. And if you can take a look on Friday, as the market was selling, the gold was gaining some momentum here. It was a positive day for gold, and actually other metals as well. Platinum didn't do that much, but silver caught my attention, and silver has been holding very nicely, really sustaining this move to the upside. So on the weekly chart, it looks like we had a hard time going about the 200 weekly moving average, and then finally we broke through it, and we're holding here. This was the move the week of the last week of November, and we are holding 2 weeks pretty much steadily holding this at top of this monthly candle. So let's see what happens. Maybe the money will go into metals again. Normally, just to remind everyone or to new people, to educate a little bit, there are some assets they called safe havens, and during the market's sell-off, the money used to be going to those three assets, the classical three assets. It was gold, Japanese yen, and Swiss franc. They considered to be kind of a safe way of keeping the money. That's why they call them safe haven. So you take gold. It looks like also was a flat week pretty much, but on Friday when the market sold, gold actually gained some value here. So we'll be watching that. And let's take a look at the other two. Japanese yen. Japanese yen actually gained some strength as well. As you could see, dollar went down against the Japanese yen. And let's take a look at Swiss franc. Swiss franc didn't do positively. So yen and gold. Again, lately it's been confusing with the Fed's action, interest rate decision, inflation, and so on. But as I said, maybe the yen and gold are returning that status of safe haven. I guess we'll find out soon. So as we're already in commodities, let's take a look at a few things. As I mentioned before, we had copper selling a little bit with the markets to the downside. We are holding this 200 moving average on the daily chart on copper. Let's see what happens. Again, it depends a lot on what China index will be doing in the upcoming days and weeks. So we'll be watching copper. Now, wheat. We spoke about wheat last week, and we said that around this level, 725.5, we might find support, and we didn't really go and retest that level. Wheat has been a little stronger here and didn't really fall back to retest it. So we might see in the upcoming days and weeks, maybe either retesting and then going higher, or maybe we can just go straight higher and see how far we can go. And of course, it could be a scenario that we come back and break to the downside. But as you can see the chart here, we've been really steadily holding this 725 level. So let's see, we'll be watching wheat for this upcoming week. Now, I wanted to bring palladium. It's been selling. And if you look at the daily chart, the last 2 days, it was aggressive selling in palladium. Sometimes I look at this instrument, and if you take a look at the monthly chart, this sell-off move stopped
with this bar here in November of 2021 with a low of 1693.70. So we could be approaching that 1693, 1694 level. If you take a look at the weekly chart, we're getting closer here. And that level also, as you could see, it was really retested a few times until we jumped and we made a higher high against the previous resistance. So very interesting situation here in Palladium. Like I said, every time you see aggressive selling, it could be that we're approaching a certain level of support. And technically speaking here, if you look at the chart, we could be getting close to that support. So that on the Palladium. That's it pretty much with commodities. Let's take a look at the Forex. We start with dollar index. Now, dollar index, if you remember, we mentioned 104.5 support. We did hold it for a while, and then this week on Wednesday, we broke down and we went as low as 103.12, and then even lower here, we almost hit 103. So on Wednesday, we went to 103.04, and Thursday and Friday we bounced. So now it's a mirror reality in the way that support could be becoming a resistance, and that would mean that dollar index could continue sliding here. But on the weekly chart, take a look nicely. From this level here, we made highs, and if we this week, Monday, Tuesday, we go above 104.5 and start building support, that would mean that we continue higher. Fundamentally speaking, dollar could be supported here by more hawkish mood of the Fed and continuation of the interest rate increases. So this 104.5, again, the key level in this case, we're facing resistance. Let's see how the instrument will react against this level. And of course, with that, if you remember, we mentioned the major currencies as they reach specific levels here, and that's what happened. Euro dollar, we did break above the resistance, we played around it, and then we back into this zone below 106. So that could mean that we continue lower to the downside. Let's see what dollar index is doing. Pound, similar idea. Take a look. We did break in the beginning of the week above that resistance of 122.90. We spoke about it last week, if you remember. And also we tried to run, and then with the hawkish mood of the Fed, we actually went lower and we below that level. We could continue sliding lower, would come and retest it again and maybe build resistance, or we might even go higher. It all will depend what dollar is doing next. And of course, pound is sensitive to what's happening in the UK with the economy and everything else. If you take a look at New Zealand dollar, the same thing. We held this resistance. On Thursday, we sold out heavily. And all the major currencies reacted to the current levels nicely. And that's what we mentioned last week. Now, few things with the Canadian dollar. It looks like we mentioned it last week, so we should be watching the Canadian dollar pairs, and they actually had a nice move, and then towards the end of the week, a reversal came. So here's your Euro CAD. We did hit that resistance here, and that's a weekly chart. And the daily chart, after this large range candle on Thursday, Friday came the red day. So it could be that, especially here, if you take a look at the pound Canadian dollar, we could be facing a possible reversal as this all this move against the Canadian dollar is kind of overextended. Again, it could be continuing but it looks like traders are finding an opportunity for shorting here, and that could actually trigger some moves to the upside in Canadian dollar against the other currencies. So we'll continue watching Canadian dollar pairs. The only currency that it really didn't have any strength, it looks like it's against Japanese yen. As I said, Japanese yen has been strong together with gold on the falling market. And again, it looks like here on the Swiss franc also, it looks like it's looking for a possible reversal and gaining some strength. So again, just to put it all together in the currencies, dollar index 104.5. If we see continuation to the upside, then we'll see, of course, strength within the dollar against the other currencies. And Canadian dollar will be watching for possible increase in strength. It's been super weak on the oil prices falling. And of course, we'll be watching the oil, what's happening in oil. I think we missed talking about it. So oil has been, if you take a look at the weekly chart, it's been moving clearly in a downtrend, making lower lows and lower highs. And then it looks like we found some kind of support around 70. We hit 70.09, and that was the first week of December. Then this past week, it was a positive week for oil. It looks like we built some support around here, around 72, and regained in the price to the upside, but then we found a new resistance around here, around 76. So this was the level of support from which we made high. Then we came back, had a lot of actions here around 76 again, and now on Wednesday we broke through it, but then we came back. So it looks like we are in this range now between 70 and 76, and let's see what this week will bring. Again, it's a winter season. We might see more usage of the oil on one side. On the other side, with the Feds not being so friendly to the markets and recession kind of on the horizon, we might see continuation to the downside. So far, we're clearly in a downtrend on crude oil. As I said, we have a lower highs and lower lows, and if we continue lower and break that 70 mark, that would actually mean another lower low. So as of now, we're zigzagging in oil to the downside. That's as far as currencies. And let's take a look quickly at cryptocurrency. And we mentioned, just to remind you, that we've been trading in the range for a while between 15.5 and 17.5. And then we broke through 18,000 and on Wednesday. Was it Wednesday? On the 14th. And then as the market went down, Bitcoin went and traded below this consolidation zone. So as I mentioned last week, that the Fed's decision will be sensitive, not just for the equity markets, but also for crypto markets. And it looks like it's been affecting crypto world in a negative way. So we're still in that range. If you take major cryptocurrency as Bitcoin, we kind of in between of that range, between 15.5 and 17.5, trading around 16.5. So again, to put it all together, it's going to be an interesting week. That long week of announcement and market reactions is behind us. And now the question is, will the market continue going lower in this pessimistic outcome or outlook of the Feds, or will they find the reason to rally into the end of the year? As of now, it looks like the overall mood in the market is not so positive. So we'll be watching the equity markets. We'll be watching the dollar in this level, dollar index 104.5. Will it bounce higher and continue on the Fed's bullishness? And we'll be watching gold and Japanese yen. As I said, it might be that they're returning the title of safe haven. And I want to wish everyone a good weekend, get some energy, get some rest. And I wish everyone a successful week. And of course, it's a preparation for the holiday. So lots of happiness, lots of joy, lots of good things. And I'll be happy to see you all next week. Take care. All the best.